The IMF has given us a big pat on the back for being the best in the world. What is Dr. Phil and his RBA buddies smoking there in Martin Place? And has Afterpay bottomed and is it up, up, up? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, I know you think economics is boring. But when the IMF tells us we were going to grow at 3.5% and we're now going to grow at 4.5%, you have to be happy about that.
I'm happy about that, but like most things with the IMF, Peter, they're always a little bit late.
Yeah.
And they tell us what we already knew. But look, I guess it's a pretty upbeat assessment on world growth. I think that's the big thing. I heard India is over 10.5%.
11%, yeah.
Which is pretty staggering. So
the vaccinations are going to be critical to this outlook, of course, without a doubt.
But, it's good news for Australia, good news for growth. I mean, the German market at an all-time high last night, Wall Street at all-time highs the night before, had another go last night. I mean, that's why the markets are where they are, Peter. The economy is growing, vaccinations are happening, employment's booming, and we're into the roaring 20s.
Yeah,
right?
well, that's what Michael Knox said a few months ago, and I reported
He's looking like a guru, isn't he?
He's now saying we're looking at more like a warring 40s, because after World War I, the boom that followed that was even bigger than the roaring 20s. So we could be in for something really big, Paul. Let's go to the next story without the bell. There's the bell. Dr. Phil, he's now starting to worry about house prices, but he's not going to raise interest rates until 2024. Now, what are they smoking?
Now, of course, we're talking about our beloved central bank governor. Yesterday, bottom line of the RBA statement, there will be no interest rate at the earliest before 2024. That's still 3 years away, Pete.
Yeah.
Right, at the earliest.
All right. So if you can trust him, you would just go into a variable home loan interest rate loan, and you're not going to see a rise to 24. That's a promise.
That's a promise. Now, promises change because of circumstances change.
Right.
At the same time,
we economists lie.
Yeah, at the same time, he's getting a little bit worried about home prices, which is...
Wonder why he's doing that.
Wonder why he's doing that. The market is booming out there. Interesting, fixed rate home loans have all gone up, Peter. We've talked about you weren't going to see them much longer in the ones. That's just too low. That's partly the bond market. But if you believed Dr. Phil, and we believe... He believes what he's saying, right?
It's like George Costanza's Seinfeld. It's not a lie if you believe it.
Yeah. We believe he believes what he's saying. You just stay variable because there's no chance of rates increasing for 3 years plus. But I think the market's moving on from that, Peter, and we're all starting to sense that...
Well, that's interesting, Paul, because you made the point. The banks are no longer offering 4-year rates under 2%. If you want something low, you've got to go 2 years because they don't think interest rates are going to stay still for 4 years.
Now, again, just to go back to Dr. Phil, he's worried. What he wants to see is wage growth, Peter, and I actually think we're going to start to see wage growth. If you look at all the employment data coming out, record number of advertisements in February. You look at the last figures here. We couldn't believe the last unemployment figures. I thought they were just the ABS normally getting it. It washes through the system. 1 month's high, next month's low. You average it out, they get it about right. That's the ABS for us. But maybe there's a bit more to it than I thought. And the economy is starting to roar. Travel boom with New Zealand opening up. Right. Off we go, right? These are the roaring 20s or the roaring 40s, and I think Dr. Phil is going to change his tune, but he believes it.
That's right, and economists are famous for changing their forecasts, and it's not a lie if you believe it. Next one, Afterpay.
I was going to give you the yes or no joke, but we'll do that for another time, all right? Of course, economists can't give you a yes or no, it's the third answer, don't I? Is Afterpay a buy? Yeah, look, Peter, I'm changed my view a bit on this sector. I think we probably have come that when we saw $150+ in Afterpay, I think the sector's coming off the boil a bit. But we did say at $100 they'd be buying. We saw it got to about 99.70 late last week. Yesterday had a good rally of almost 10%. It's a big move for a stock like that from $105 to $115. I think it can go back to about $120, $125. But I do think the sector has matured and the market is maturing in its assessment. So I don't think we're going to see the same highs, but I think the market's starting to recognise there's a lot more competition about to hit this part of the industry. But to Afterpay's credit, $100, go from $155 back to $100, you get a bounce, right? That's what we're seeing at the moment.
And that bounce is sort of saying that there are a lot of people, smart money people, who think that probably 100 is going to be the bottom for a stock like this. You're saying it'll go to 120, 125, that's probably in the short to medium term, but it'll probably it'll be a climber, I think, Paul, because the whole market's growing, even as and it's the largest player even in the US market. So as that market grows, there's more competition. It'll probably be a company that will go really well over time.
And what has been really interesting is the really good tech companies have bounced really hard. We have been saying last couple of weeks in this rotation, no one wants tech. They got sold off too far, but you've seen big bounce in Xero, big bounce in NextDC. Even Appen has started to bounce a little bit, and there's some others. So people have picked out sort of the ones they want. Afterpay's in that quality end too, because it has a legitimate business. Probably doesn't think of itself as a tech stock, but it is a consumer business. But it's a big business. It's here to stay. It'll find a level, but at $100, I was looking to buy. It didn't last very long. That's why it's $150. But I do think, Peter, that the market's saying that whole sector is a little bit overdone.
And I'll give you a bit of inside information, Paul. When I got to work at 5 in the morning, yes, that's the time I got to work, the CEO of Zip, Larry Diamond's car, was already in the car park. They're in the same building as us here, and he's burning the candle at both ends, watching Wall Street, he told me. He's watching Wall Street. So that's a very, I can't tell you any more, any people who watch the show know it. I'm Peter Swetzer.
I'm Paul Riggott,
and we're mad about money.
Shh.